3, 4 steps I take from my bed to the floor. 5, 6, 7, 8. Will today be rough or will today be great? 9, 10, 11, 12. Lately I've been going through hell. 13, 14, 15, 16. Today's the day. Are you coming? Are you sick of being normal? I'm sick of being average. I'm sick of being mortal. I'm about to be a savage. I see a lot of things that I want, I will have them. I got a new mindset that I just established. I'll march through the cold with the nails on the pavement. I'll shovel that coal just to get out the basement. My story will be told, helping others make changes. I'll be so bold, they will watch in amazement.
I'm not gonna face it, I'm not gonna chase it. I'm not gonna start over, I keep waiting. Time is limited, quickly fading. Get my mind right, it's my time to take it. I'm not gonna face it, I'm not gonna chase it. I'm not gonna start over, I keep waiting. Time is limited, quickly fading. Get my mind right, it's my time to take it.
Foot up on the pedal, pushing hard to the metal. Make a deal with the devil. Channel rage through my vessel into something that is special. Energy of a rebel, going up a level. I just wanna be greatness. I could feel changes, turn a new page and tie up my laces. I will be the bravest, break out of my cages. I will not be nameless, I will not be aimless.
I'm not gonna chase it, I'm not gonna start over, I keep waiting. Time is limited, quickly fading. Get my mind right, it's my time to take it. I'm not gonna face it, I'm not gonna chase it. I'm not gonna start over, I keep waiting. Time is limited, quickly fading. Get my mind right, it's my time to take it.
You are now live with the Locked In Podcast. As always, your hosts for the evening, Steve Ushler and George Mecaj. If you're watching on YouTube and you're not already subscribed, make sure that you click that subscribe button and hit that notification bell to turn notifications on to stay up to date with the most current personal development tips and sports analysis. With that being said, welcome to the podcast and enjoy the show. Give me 1 second. There we go. What is going on, everybody? Welcome back to the Locked In Podcast. This episode 177. And guys, we are back this week after a 1-week hiatus and making improvements to the podcast. We are back with another episode, and it might just be me on here tonight unless Mario kind of comes through, which hoping he does. Everybody is busy. It is the summertime, as you know. So as we're kind of constructing our team here and putting together the new team, some of these episodes where I don't have a guest scheduled for a particular week or when somebody has to cancel, I kind of plug myself in here to work. But this was an episode that was talked about prior, and we've done financial literacy episodes on here before. But tonight, guys, we are back in the financial literacy realm. We are discussing credit. And we've mentioned credit on here before. I'm sure you guys know that. If you've watched our episodes or you've seen any of our financial literacy episodes, you understand that. We've broken down at any given time, the most popular credit cards, the different rewards between them. We've broken down FICO scores. We've talked about the different percentages. I'll give you a quick refresher on that tonight. The areas I want to focus on here, because I want to help you guys out. Anybody out there who's struggling to understand credit, you've come to the right spot, because I will give you crash course. And guys, if you want to see more episodes like this, let us know. I love helping people out on the financial side of things. It's one of my biggest passions here. So guys, if you want personalized, you want to sit down and just have a conversation or a coffee or anything over personal, finance and just talk. I'm always available. You can actually check out my doc card link in the description of this video, and you can set up a meeting with me. We can sit down and talk. But credit is such a big thing, guys. And I 10 years ago, I really didn't, I was kind of just starting to really 2013, 2014, kind of start to build my credit for the first time, after high school. I was about 21 years old at the time, and I got my first credit card. And I've come a long way since, but I also know what it's like to be in debt, and I also know what it's like to get out of debt. And if you can manage your credit cards correctly and appropriately, it can really open up a lot of doors for you. This comes in terms of, whether you want to travel somewhere and take a trip, or long-term investments, such as financing a vehicle, purchasing your first home, investment properties, anything like that. Credit goes a very, very long way. It's a very, very important tool in the financial spectrum. And it doesn't make you rich. I will say that, is there's a lot of people that think if people have credit, then to be rich. You could essentially be poor and have great credit. It essentially means you pay your bills on time, you're responsible, and that lenders are willing to give you more money because they can trust you. It's based off your trustworthiness. But credit can be the start to building wealth. So even if you're not there yet, you have an 800 credit score, which is what most people strive to get to that 800 range. And I can tell you, once you get there, it's a great feeling. But it's a stepping stone. It helps you out. If you don't have much money, you want to purchase your first home, having good credit will get you a better interest rate. Similar to with a car, you say you're going to finance your first vehicle, it's going to get you a better interest rate, which means your payments will be lower. So credit is a fantastic tool. It really, really is an absolutely fantastic tool, and it's very, very important. It's very important. Your trustworthiness and your creditworthiness. And the thing about it is it's built. If you're struggling, sorry, I'm not trying to take calls during this. I should have silenced my phone there. Essentially, if you have a bad credit score now, the good thing about credit is you can always rebuild it. There's always ways to do that, and there's always strategies that you can utilize. Tonight, I'm going to talk a little bit about credit utilization. That's one of the things, it's one of the big 5 factors with the FICO credit score, and I think it is the second most largest percentage that you can have when it comes to your FICO score. Number 1 is on-time payments. So you want to get those on-time payments. About 35% of your FICO score is comprised of making your payments on time. And obviously that goes into trustworthiness. So if you can make your payments on time, it's trustworthy. I do want to say something, guys, before we hop on here. If you're watching on YouTube and you're not already subscribed, hit that subscribe button and hit the like button if you like what you're watching here tonight. Hit that notification bell as well to turn notifications on, because we release new episodes every single week, other than our hiatus weeks where we're doing our marketing and our social media development behind the scenes. So usually every single Thursday we have an episode. It's either related to personal development or sports. So you don't want to miss that if that is something that interests you. And if you're watching on Facebook, I want to say that you're probably already part of the group. So I want to thank you, because this is actually only streaming on our private group. So you have to actually be a part of the private group to watch the streams now on Facebook. So if you're watching on Facebook, give you a thumbs up there, and thank you for being a member of the podcast. Similarly, if you like what you're watching here tonight, hit the like button. Also, feel free to comment in. I will put your comments on the screen here if you are commenting on YouTube. If you're on Facebook, I actually cannot, but actually Marius here. Hey, my mans, what's up, brother?
Yeah, what's up, my man? How are you, dude?
Good, man. Good. Yo, I appreciate you coming on, man. I thought I was just going to be kind of doing it by myself, man. But I know it was like a little bit last minute, man. But I appreciate you joining in, brother.
No, you're no problem, man. My pleasure, man. My bad for not getting back to you earlier. I did see your text, because I was working, and what had happened was after I finished work, I just passed out. I was just tired, And by the time I woke up, I realized it was really, really late. So I just tried to get ready tried to get on here as soon as I possibly could.
Hey, man. Well, I appreciate you sacrificing your time, brother. That really, really means a lot, man. So thank you for joining.
No problem, man. No problem, bro.
Yeah, man. I thought this would be a great episode for you too, man. I mean, these financial episodes, man, like I love to, I'm personally have a real passion for them, man. And credit, man, as I know something that you're working with too now, man. You know, two people who have really built their credit scores up, man. You know, I really wanted to see if you could get on here for this, man. So I just was kind of going through the gist of, you know, what I was going to talk about tonight. I know we've talked credit on here before. So I kind of wanted to, you know, dive into a little bit into credit utilization for people, and so that they can understand how that works. Also maybe talk some things like, what was the other thing that I was thinking of? Maybe like how rewards work. Obviously, every credit card has different things. So I'll explain how you can kind of find out where you can see where those benefits are and where you can understand the different benefits of your cards. And then also, if we have a little bit of time towards the end, this is more on the business side of credit cards. But there's a thing called credit card stacking, and it's a way that small businesses can actually utilize different credit cards to increase their overall capital and different credit card limits. So that more applies to people who are either thinking about starting a business and maybe can't get this traditional sources of funding, or people that maybe already are running a business. So some things to talk about, but I was just going through the generality here, man. You know, we've talked credit on here before in some of our financial literacy episodes I know that you've been a part of. And I was just explaining how important credit is, because it doesn't essentially make you rich, but it's a good stepping stone to kind of get your financial literacy. And I mean, your financial health, overall health, and your overall portfolio in good working order. Because once you establish good credit and you're able to kind of keep your debt very low or pay off your cards each month, and you're able to kind of increase that credit score, it opens up a lot of doors for you. Because say you have like an 800 credit score, if you go to make larger purchases like financing your first vehicle, purchasing your first home, these things greatly affect your interest rates and what you'll ultimately be paying to keep your payments as low as possible. So a very, very big stepping stone with credit.
Yeah, no, of course. I mean, credit is really everything now. It's like the new digital currency. The higher your credit score is, the better off you're going to be. I mean, you walk into a car dealership and the salesman is there, and if he sees you walking in there with an 800 credit score, and then there's another person, their credit score is only 650, chances are you're probably going to get the better deal. You're probably going to get the better rate. You're probably going to get the better price. It really, really, credit just affects everything that we do. And it's crazy because when I was younger, I never really thought about it that way. Growing up, I thought that credit was bad. Often I would hear horror stories of people abusing their credit cards, going out there shopping, spending money on dumb stuff. But what had happened was, as I got older, I started to realize the importance and the value of credit. Because back then I was paying for in cash everything. Anytime I would go outside and make a purchase, 9 out of 10 times I would pay cash for it. But now it's like the opposite has flipped. Now 9 out of 10 times when I make a purchase outside, it's usually with a credit card. And we'll get more into the rewards obviously as the show goes on, because I definitely want to talk about that, especially with the two new credit cards that I got earlier this year, possibly another one that I may be getting in a few months. We'll see what happens with that one. But yeah, I mean, if you know how to utilize credit or whatnot, you can really, really reap the benefits of it.
Absolutely, man. And I was actually going to say that there's more things that actually even go into it than just a score, right? As we'll talk about later, there's some great benefits that you can really get from utilizing your credit cards and managing them appropriately and really using them in the best case scenarios to maximize your benefits. There's some great things that you can get out of these credit cards. And most people will say, oh yeah, that's great. It's a cashback card, so I get some cash back, or it's a miles card, so I get some miles. But really, a lot of times people really don't know really how it translates and how it works. That's why every card you get, if you get a credit card, say you're getting your first credit card, second, whatever the credit card that you're getting, most of the credit cards out there are either related to miles or they're related to cashback. It's usually two of the biggest categories. There's some other ones too, but those are the main two. So a lot of people will have at least like one travel card and one cashback card. And each card is, I'll say, like, say you have a Capital One card. You can usually go to the app or the portal or on your computer, and you can like actually look at your card and look at what the benefits of each card are. And that's the thing. Like if it's a cashback card, say you might get 5% on a certain card, with groceries or certain things. And that's what you were saying too. Like I know, if you go grocery shopping, hey, I might use this card to do some of my grocery shopping, or hey, I know I think you found a loophole with a gas station and being at the grocery store. See, because it's a grocery store card, it's charging it though the gas as the grocery store thing. So you're still getting that cash back rewards from getting the gas, which is actually a super big hack. So that happens at a lot of spots like Giant. Sometimes I think there's some Giants out there that have gas stations and stuff. I think Sam's Club is one that has a gas. A lot of the rewards places like BJ's and Sam's Club have gas stations. You can utilize for like the ones that you get cash back points on groceries and stuff. You can utilize your cards at those places and you can still get them points. And there's cards out there, actually cashback cards. You actually get points back on gas as well. Some of them though, I notice, not all of them, the gas points aren't as high as the grocery points. So if you can find a spot that gets you like 5% on groceries and utilize that on gas, that's actually a huge hack that you can really utilize to really put some extra money in your pocket. And this is money. The good thing about credit cards, it's money that you were already going to spend. You're essentially just putting it on a card to get those rewards. Now, if you put it on your debit card from your checking account, you're not going to get those same rewards.
Yep. And think of it this way: if you were paying cash for all the purchases that you just talked about, you ain't getting anything back. So here, at least with the credit card, at the very least, you're getting some type of cash back. And on top of that, not only are you getting cash back or miles points, whatever card you're using, you're also building your credit along the way. The more on-time payments you make, the better you're showing off financial responsibility. The higher your credit score is going to, the higher the credit score is going to go, and that right there is going to lead to better things down the line.
Absolutely, man. Couldn't have said it any better myself. There's a phrase out there, and a lot of people, pretty much everybody knows this phrase: cash is king. So I don't want people to get it twisted. I still do believe that cash really is king because it means
I believe that as well.
It means you're liquid. It means you're liquid. So if somebody says, "Oh, I have all this," but they have to sell off shares of something, technically, you're going to get taxed on it. You're not completely liquid. Now, there's a big difference between $150,000 in. So you have a credit limit of $150,000 and you have cash of $150,000. Obviously, and this is obvious, $150,000 cash credit limit is nothing. It's money you have to pay back, but $150,000 in cash is cash. I still do believe cash is king because overall it means you're liquid. But I will say this: if you're gonna put money into an account, like we'll talk savings, investment stuff. If you're gonna spend money and want to get rewards, credit is the way to go. And if you're holding money, people will tell you investment are ways to go. Like obviously, something you experimented with within the past year, CDs and stuff. So you're going to get interest rates. If that money is sitting there in cash in your bedroom or something, that money's not gaining you any money. So there's tools for everything. I will still say though, cash is king. I do believe that because it means you're ultimately liquid as an individual. So like nobody's going to turn you down for cash. You know what I mean? If you can pay someone out $100,000 outright in cash, and versus financing something, that person's not going to turn you down for cash.
No, I agree 1,000%. At the end of the day, as important as credit is, cash is still the king currency. And going back to the example that you used, having 150,000 liquid cash versus having a $100,000 in credit limit, you have to understand that with the credit limit, that's technically not your money. That's money that you're borrowing to make purchases on goods, with the exception that you have to pay that money back by the due date. Whereas if you have $150,000 in liquid cash, that's your money that you can use to spend on whatever the hell it is that you want to spend on. That has no interest or anything like that. You can choose to spend that money however you want to. But make sure though that when you do use your credit card to make purchases, and it's very important, make sure that you pay off the entire balance in full and on time, so you don't get interest attached to the card. Because what happens is most people don't pay the card in full, and even if you end up making the minimum payment, which you avoid the late fee, you're going to end up paying more in interest over time. So it's very important that whatever you use on the card, that you pay it off in full in order to maximize the rewards.
Exactly, because the rewards aren't going to outweigh that interest. So
no, because here's how it works: the moment that you're paying late fees, the moment that you're paying on interest, you've already lost the credit card game. It's over. Yeah. The credit card company's won. The only way to win the credit card game is to pay whatever the balance is on time and in full. That's the only way you're going to reap off the rewards. Other than that, you're going to get saturated in debt, you're going to end up paying interest. You may end up paying late fees. And at that point, it simply just isn't worth it. Or at least in my
no, it's very important to notice too. And it's like Caleb on his one episode says, not everybody's credit card people. Not everybody are credit card people. And that's the thing to understand too, is if you feel like you have maybe this isn't a good point in your life to go get a credit card, if you feel like that you're going to have issues with it and things like that, because that's the thing. I grew up too, like having like a kind of a fear of credit cards, even though I grew up in a household where with individuals who manage their credit appropriately. It was kind of always just one of those things. Like I had other family members and stuff and like who had gotten into credit card debt and stuff. And it's just one of those things with it's like a stigma, right? You grow up thinking that credit's bad because a lot of people, you see people get into these situations where they're in really, really bad credit card debt. The only thing is if you manage it appropriately, I mean, the rewards that you can reap are fantastic. But it's like Mario just said, if you're paying interest and late fees, the credit card rewards that you're getting are not going to outweigh those fees. Give me an example. Like the average credit card these days has at least a 15% interest rate. So say for any,
some cards have it up to 30%.
Yeah, well, a lot of them are, but they range, but they're like variable 15 to 30%. A lot of them are, but like even like the average low credit card rates are 15%. So I saw something earlier, and it was like say you have $20,000 of credit card debt, and you're paying at least 15% interest on that. It's like, and you're making only the minimum payments on it. You know how long it would take to pay that credit card off? And they said 45 years. 40. If you just continuously made the minimum payment, 45 years, that is more than half a lifetime for the average American. So like, that's the thing. Like, even if you're gonna, I agree, Mario. You should always pay off the balance in full. But say like it's a big purchase and you're like, but I can still pay it down in a couple months and stuff. You might make the minimum payment for 1 month, eat interest for a month, whatever. But here's the thing: if you're somebody who knows you can't afford it and you're going to be paying the minimum monthly payment every single month, yeah, technically you're paying it on. You're still making the minimum monthly payment. You're not missing a payment, but the interest is going to eat you up. It's going to kill you.
No, I mean, there's exceptions. Like, yeah, in your example, like, if you run into a situation where you have to make a big purchase and it requires you a few months to pay that off, I mean, that's absolutely fine. I'm talking about in a scenario where you're not paying it off in full every month. Like 12, like, a year goes by, 2 years go by, and the balance is still not satisfied. I mean, that's all the interest now that you racked up that you have to pay on top of what you already owe.
Yep. Exactly. And I've seen it before, man, in the past, like when I wasn't really like when I was younger and wasn't really great at management. I remember at one point, I think I had over 1,000 something sitting on a card. And then like, I'm seeing the interest and like every single month I'm paying like $40 in interest and stuff. It was when I was younger and just not more naive, like, and not as, I didn't understand like what I know now. And at the time you're thinking like, oh, I'm still don't have to pay that full 1,000 something, like, it's only $40 or whatever, but it adds up. If you keep that on there for years and years and years and years and years, that's a lot of interest. And they actually said with that $20,000 over those 45 years, you're racking up $37,000 or $35,000 in interest. So the interest is essentially almost double what the actual amount was. So see, that's how you get killed in the long game.
No, that's how credit card companies make their money off that interest. That's
Yeah.
it. Can you imagine how many millions of Americans are in debt, man? Imagine all that money they're making in interest fees and late fees, dude.
They don't like people. They don't like people who pay it off each month.
Oh, they hate me. Oh, they hate me and you, bro.
Yeah,
when we pay our balances off, they're like, damn it, we can't get these guys, man.
Yeah, but that's literally why they're in business. They're in business because they're gonna make money off the majority of if you just see people, like the majority of people just don't know how to manage their finances appropriately. And the thing about it is if they just took a little bit of time to understand, I don't really think credit is that complicated. It's really not. I think it's actually one of the more simple things. Credit can become complicated across multiple accounts. If you're managing like multiple credit cards and you're using multiple credit cards, even if you're paying them down, it can get very complicated. But I'm going to be honest, the overall general understanding of credit is actually not too complex. There's 5 factors that affect your credit score. One of them, and the biggest one I was saying earlier, is 35% of your score is your on-time payments. The next one, which we're actually going to dive into, is credit utilization. You also have your mix of credit. So if the more credit cards you have and your mix of credit, that affects it. And then on top of it, what are the other two? I have them right here. So the other one, obvious. Sometimes I'm just blanking here. Length of
Right
credit
there.
history.
I was
Length of
just about
credit
to say
history is
yeah,
one.
credit history,
And then the amount of
and then the inquiries. How many inquiries have people had on your account?
yeah, that's true. That's true. So
I
they
think
have
that's
to
only like 10% or 10 or
yeah,
50%.
it's not much. It's not much. That affected me a little bit at one point. Because when I went to finance a newer car, they shotgunned my credit at the dealership. You know, I had great credit. What they did was they sent it out to multiple banks. So I ended up with all these inquiries. So I actually called them and I tried to dispute a little bit of it. Some of it sat on there, but the thing about it is it affected my credit card at first, and then it wound up just outweighing it eventually. Like down the line, those inquiries come off, and that's the thing. They're small. They're not anything big. As long as you're making your payments on time, your credit utilization is essentially low. You're going to be able to really maximize the credit game and maximize your credit score. Length of history is just something that you have to deal with. That's one of the biggest things that I would say negatively, but it moderately affects my credit score because I didn't get a credit card until like 2013, 2014. So that's considered average in the credit game. It's
Well,
not
here's
considered.
something. Yeah, here's something interesting about that. I never even realized it, but apparently, when I took out loans to pay for college back in 2011, um, apparently my student loans are my first access to credit history.
Yeah.
Because I didn't get my first credit card until like I would say like 2015, or it might have been at the end of 20. It was like 2014, 2015. I thought that's when my credit history started, but no. When I actually, because a few years ago, I like actually like went through it to see exactly when my credit history started. And actually, it wasn't when I first got my credit card. It was actually because of my student loans. So for anybody out there, if you never had credit before and you took out student loans, those loans are actually a part of your credit history.
Yep. Anything like that. So student loans, if you finance a car, you finance or lease a car, access to credit history. You buy your first home, say you never had credit cards, never student loans, you buy your first home, access to credit history.
Mm-hmm.
That's how credit starts. So yeah, no, because same thing, my student loans and my car note appear on my credit report. So like when I see the credit report, I see both of those on there. So if you're leasing finance a car, it's the same thing. So yeah, you're actually right. So the funny thing was is I think I had the credit card before I actually had to take out student loans for college because I started at community college. I was able to pay community college down on my own without any student loans. And by the time I got to Temple, I had already had a credit card. So that credit card was technically my first access. Then right after that, I had to take out student loans. So
Yeah, and I wish I couldn't pay a Holy Family out of pocket. Unfortunately, at the time, I had to take out loans. I mean, I had help with grants through the state and some scholarships here and there, but for the rest of it, I had to take out student loans, to pay off for school. Thankfully, though, when I graduated, I wasn't in serious, like I wasn't in a whole lot of debt. I only had like $35,000 in debt that I had to pay back, which I've gotten it down to now 15,000 left. So I'm chipping it down a little bit by little bit. But luckily for me, when I graduated school, I wasn't in a whole lot of debt. I mean, I've heard some stories where some people graduate college, man, their debts are like over 100,000. I'm just like, God damn, it's gonna take a while to pay
yeah.
that off.
Yeah, I had more than you just with the 2 years at Temple. But I'm glad it's not over six figures, man. Thank God. I'm thank God I'm not at that. Yeah, I have some friends, very unfortunate scenarios, but college can absolutely fleece you. And I do think it is I think college is a fantastic opportunity for people who are going to pursue the correct majors. That are really going to generate them wealth and generate them money and be able to pay off those loans. But I'm going to be honest, for the amount that they charge, it can really be considered a scam. And honestly, we could do a whole episode on that, to be honest. But it really and it really is. They draw people in with experiences and stuff like that. And then there's a lot of people out there that major in things that have no relevancy and don't translate to. They might be a fantastic hobby or passion, but the unfortunate reality is a lot of these don't translate to careers that make you a lot of money. And unless you have like connections or something like that in whatever the field is, but it's very, very sad because you just see people get into a ton of debt and it becomes very challenging to reverse that. It does. It becomes super challenging. And then you have a strain on them for the rest of their life.
Yeah, and then on top of that, you have a tough economy to deal with, man. A lot of people are
Yeah.
losing their jobs. It's even difficult to find the jobs. I mean, some of those bachelor degrees that people are getting, man, are becoming worthless and stuff like that. So on top of that, not only do you have a lot of debt, but it's going to make it more difficult for you to pay off that debt with the current economy that we're in.
Yeah, I'm not a student advisor or I'm not even a licensed financial advisor, but I'll tell you this. If you're From my personal experience, if you're honestly thinking about college, but you have no idea what you want to major in or anything like that, In college, they give you the 2 years to, think about what you want to do. That's all right. Go to community college. I'm going to tell you right now, go to community college. At least you're not going to spend a fortune and get your associates. And if you still can't figure out what you want to do after those 2 years, take time. Take time. Don't jump into something, because I'm going to tell you right now, like, it's, once you get to the university, if you don't have, like Marius said, grants or anything like that, it's going to be a lot of money. Unless you can pay that outright, or you come from a family that has wealth already that can pay out your college tuition, it's going to be debt that's going to sit with you. And I'm really happy, because I was going to go to university for all 4 years. I was going to live on campus, and I can't imagine what my debt would be. It'd probably be over $100,000, to be honest. And it was one of the best decisions I ever made, was not to do that.
Yeah, no, that's what I was actually planning on doing as well initially. I was actually going to go to community for 2 years to get those basic courses out the way, and then transfer those credits over to another university for the final 2 years to complete the major that I was in. But what had happened was Holy Family made me like an offer that I couldn't refuse, and I just ended up going there for 4 years. But if it wasn't for that offer, I definitely would have done what you did. Went to community for 2 years, then maybe either transfer it to Temple or Drexel or any of these colleges nearby.
Mm-hmm.
It just makes sense from the financial aspect of it,
Yeah,
especially now, because I hear colleges are just getting more expensive than they used to be.
Yeah, they really are. I'm seeing even high schools, man. Like, I mean, like, at least the high schools we went to, we went to Catholic high school. Like, I think Father Judge is up to like $10,000 a year now. $10,000, like 40,000. Just think about that for a sec, bro. You got a grant to Holy Family, and you got 30,000. It was like 30,000 in student loans. Dude, Judge alone is 40,000, man. You go there for 4 years, $40,000.
It's cheaper to go to community college than it is to go to a Catholic high school.
Oh, it's cheaper by a long shot. You can go to community college, you won't even have 20,000 in student loans, man. Because the thing about community college is not 4 years, so 2 years. They do have extended programs like nursing and stuff like that, where I think you can do 4. I don't even know if you can. I think you have to maybe transfer to Penn State Abington or something. I'm not sure, but I think they do have programs maybe. But majority of 90% of community college is 2 years. But even in 4 years, whole community college would not be $40,000. Like, it's and I'm sorry, like a lot of places, unless depending on what your career is, don't really care where you went. And I'm not going to say that for every career, because if you practice law at like Harvard or something like that might go a long way in the legal field, and become a doctor, and you go to freaking Harvard Med or something. It might go a long way. I'm just saying, in every field, it doesn't always matter. It depends on who you're going to work for, but a lot of times it really doesn't matter the name on the diploma. At the end of the day, you became, you got your degree, and yeah, your skill set outside of college is what's really going to translate. Like, you know what I mean? Like, once what you can do outside of college is going to be what's really going to translate.
Yeah, that's how you're going to make your money.
Exactly. A lot of days nowadays you can just get certifications, but this is one of the things they really don't teach you about in college, though. Credit. It's one of the things that I personally think this is something that needs to be taught in high school. They need to teach you how to budget. They need to teach you how to manage your money, how to save, how to invest, and how to manage your credit. These are like big things. Financial literacy is not something that's really covered in high schools, at least most high schools.
No, it's not, and it's a shame, because it needs to be covered more. I think if it was covered more, we probably wouldn't see the bullshit that's going on today with so many people in debt and having such shitty credit scores and whatnot, because most people are not financially literate. They don't know how to work on a budget. They don't, they get carried away by the spending, and then they end up getting in a situation where they don't need to be in, and all of a sudden now that hole that was just little, now it's gotten bigger and bigger. So I think it should start. I agree with you 1,000%. It should start in high school and then carry on to you in college. So that way, when after you graduate college and you're an adult entering the workforce, you'll have a good idea of how to use money.
Absolutely, because we live in a consumer society, man. And, we're always trying to keep up with the next person. You see with everybody, the next what this person's doing and that person's doing. And the unfortunate reality is like you don't really know that the next person you're trying to keep up with is probably in debt too. It's either that or they're probably making more money than you. And it's like, everybody's trying to keep up with lifestyle nowadays. And it becomes very easy to get carried away. A lot of people don't really know how to work on a budget and stuff like that, and becoming a lot of trouble. So I always say, don't always believe what you see on social media, because a lot of people that you might see living these lavish lifestyles might be funding it through debt. Credit cards is one of the ways that people can do it too. It's unfortunate if you don't manage these credit cards properly. You know, say you have a $75,000 credit limit. You could go fund a very nice lifestyle. You have a $100,000 credit limit. You could go fund a nice lifestyle. At the end of the day, you owe that money back.
Yeah, you know what the funny thing is about that, man? In terms of lifestyle, bro, I was watching a couple YouTube channels the other day, man, and it was talking about like the record number of cars that are getting repoed. Apparently, what had happened was when the pandemic started. Remember, we got all that stimulus money through the government, you know, those stimulus checks,
Mm-hmm.
and people got good jobs or whatnot. So they went out there, they went haywire. They, had some awful car payments of over $1,000. Well, now that the economy's gone bad, they can no longer afford those car payments. So what's happened is that they're getting repoed out the ass and whatnot. And that's the thing. Like you're right, man. I mean, you may see somebody that has a BMW or a Mercedes or whatnot, but that you might never know, man. That person went into serious, serious debt to get that, just to show off. But they probably put themselves in a bad place, moving forward or whatnot. Because that's what's happening. A lot of these cars now are getting repoed because people can no longer afford to make the payments. I mean, I couldn't believe some of those car notes. It was over $1,000. I'm like, why? Why such a high car note?
Yeah, it's
I mean, that's enough for a mortgage, actually, dude. Imagine paying 1,400 for a car note, man. I mean, that's literally a mortgage right there.
I know, man. Like I hate my student loan payment along with my car note, and even both of those combined are not $1,000, man. I cannot imagine paying for freaking one little thing, $1,000, man, for a freaking car note.
Yeah, just to show off. Unbelievable.
It really is crazy. My car note, 3 times my car note, isn't even $1,000, man. It's like it's crazy. It's like put what's inside your budget and what you can afford. Like I didn't go out and finance a car before I had my first like actual post college job that really was generating me money either. You know what? A lot of people told me to. They're like, why aren't you driving a newer car and stuff? Oh, at the end of the day, like that's for me to decide. I want to make sure that I have my financials in order enough for me so I can comfortably make that payment. Could I have probably made it before I was working like a standard job, like that wasn't in my field of study and like where I wasn't making the money that I'm making? Probably, but like it would compromise a larger portion of the income that I'm bringing in. I don't want that. I want to be able to comfortably afford what I'm paying for. And I love my vehicle. I absolutely love it. But even people I know that, have had their cars and stuff. I've seen, like you've seen, Rob, that people have downgraded cars and stuff, maybe to put a little bit of extra money away and stuff like that. And there's nothing wrong with that. That's somebody who's thinking smart financially. Hey, maybe I can make some extra money by, just downgrading for a little bit to a hoopty. And there's nothing wrong with that. That's somebody who has financial discipline to not try to keep up with the Joneses, because there's everybody trying to keep up with the next person. Like, oh, I'm going to drive a nice Mercedes, or I'm going to have this big house. It's the same thing with a house. How they repo a car. If you can't afford to make your mortgage payments, they're gonna foreclose on your home. So, you have to be able to afford it, and they don't play with a mortgage. I'm gonna tell you that right now. Like, they will.
I'd much rather have my car repoed than to have my house get taken. At least, with a house, you have something to sleep in.
Yeah, you have a roof over your head on. You have a roof over your head on those cold winter nights, and on those hot sunny days, man. You have that air conditioning, and you're inside the walls. Yeah, you don't want to be out on the streets, man. I agree. I would choose my home over my car any day of the week. I would love to have both of them, though, which is why I want to manage my money properly.
Exactly. Nah, I know. Going back to the car thing, man. I don't. Both my cars, I paid outright for it. I mean, I owned the 2008 Honda Accord. Unfortunately, that car got totaled. The other person was at fault, so his insurance company gave me a check, and I used that money to buy another Honda Accord outright. So I don't have a car note payment each month or anything like that.
Yep.
I just pay for car insurance, and then just regular maintenance, oil changes, and anything else that the car needs. I don't have a car note to worry about. I actually recommend everybody does that, man. If you're looking to buy a car and financially you may not really be there, look to buy a car outright to at the very least save you some money on the car note.
Yep. Or even if you're going to finance, say you can't afford to buy something outright, say you only have a couple grand put away or something like that. Put a down payment for something. Get a lower car payment. Don't go crazy. Don't go crazy. Get something that's maybe $10,000 and finance it. Put a couple grand down towards it. Finance the rest. At least your car payment will be relatively low. Depending on your credit score, other things kind of go into that, but this is the problem. You see people getting $60,000 cars financed, and that's where $1,000 car payments come in. $60,000, $70,000 car, you're financing it, and majority of people take the longer financing deal. They usually take 72 months. right? They don't take the 36 months because then the payment's going to be extremely high. Even though they're going to be paying it off, they'll be paying less interest. But most people aren't going to do that. I think mine.
I'm hearing they've extended the months because not that many people are buying newer cars. So what they're doing is because I think 72 was the max, 72 months. Now I'm hearing that they've actually extended it to 96 months, in some cases 108 months.
Wow. Ooh, I've heard 84, 96, 108. That's actually, see that, and that's the problem. That's actually horrible. Horrible.
Yeah, no, but that's how they get you, though. That's how they get you, because they're like, oh, you look at all this time that you have to pay it off, and then by the time you pay everything off, they're like, you'll have the car will have depreciated so much, and you would have spent so much in the long run that you look back at it, you're basically essentially got screwed. Yeah, I forgot which company it was. I don't know if it was Tesla or I don't remember. I would have to pull it up, but yeah, I believe that's what they're doing because not that many people are buying newer cars. It's a tough economy out there, and people don't have the money for it. So they got to make money somehow. So I think they're
9 years, man. Wow,
almost a decade for a car note, bro.
If you got to do that, you can't afford it. I'll tell you right now.
I would never do that. That'd be the dumbest thing you ever do.
Yeah, you can't afford
Even
it.
if I had money, I would still never do that. Or if I had money and I put, and I financed it, I would try to pay off the vehicle as soon as possible. Like I would probably have that shit paid off within 24 to 36 months. Like that would be the sweet spot. I would never ever allow it to go that far because at the end of the day, you're gonna imagine all that money you would be paying back in interest. You're gonna be paying more than the car's worth essentially.
Yeah, I'll be honest. Mine's at 5, but I've thought about refinancing it lower. I'm already 2 years in now, so if I refinance it for get paid off in another year and a half instead of 3 years, you know what I mean? I thought about it. I've looked at actually shopped at some rates and stuff like that. 5 years for me was the max. I wasn't doing anything more than 5, man. Like a lot of people do 72 and stuff like that. But man, 108, 90.
Yeah, I recommend you do that, bro. It might help you out a little bit.
Oh my God. I can actually extend my car note lower, like more months, and get the payment lower if I wanted to. The unfortunate reality is there's a lot of people that would do that. Guess what? You're going to be paying more interest. That's the saddest part about it.
That's how they get you.
Shows you that lower payment, and a lot of people, because my payment's like $340 something a month, like at 48, and then if I lowered it, I could get it into the 200s if I wanted to, but I'd be paying more interest. It makes no sense. At the end of the day, it'll be longer I'll be sitting there waiting to pay that car off longer. Whereas in 3 years or maybe even less if I refinance, I'll have that car paid off, in no time. So, and that's the thing. The longer you have the car, the more chance for stuff to go wrong. And depending on the car that you're financing, there could be a lot of things that could go wrong if it's not a reliable vehicle brand.
Yeah, that's why I got me a Honda. I don't have anything to worry about seriously. I've had some minor issues here and there, but nothing major in terms of any engine issues, any transmission issues, any of those, massive repairs. I mean, I would, if anybody's looking for a vehicle, I recommend people at the very least, either look at a Honda or a Toyota.
Yeah, absolutely. I drive a Kia. Kias are nice too, and then Hyundais. I'll just say Kias and Hyundais. Just watch out because there's a lot of theft going on. So with those. But yeah, no, back to credit. Credit is just is so important. I wanted to just talk a little bit about utilization. So guys, just on a basic level, what credit utilization is, it's one of the things that actually makes up your credit score. And let's see what the percentage actually is here. So your credit utilization is actually, let's see, is it 30? Yeah, it's essentially here what they say is amount owed. But that's your credit, that's your amount or your amount of debt. That's your credit utilization. So essentially, that's your total debt is going to affect your utilization. All you got to do is there's actually a really simple way that you can actually calculate it. But ultimately, your credit utilization, it's typically just focused on the borrower's revolving credit. It's a calculation that represents the total debt a borrower is utilizing compared to the full revolving credit that they've been approved for. So let me give you an example to kind of break that down into layman's terms. Essentially, if you have $5,000 in credit card debt right now, and your total credit limit between all your accounts is $10,000, essentially your credit utilization rate is 50%. That means you're using 50% of all the credit that you have. That's why I always say, like, it's either best, number one, well, this is the best thing. Pay down your debt, number one. And number two, increase your credit limits. What you can do is you can actually do this by applying for new cards. There's like a sweet spot. A lot of times people say 2 cards every year to not have too many inquiries on your account. But the more credit cards you apply for and the larger your credit limits, the higher your credit limit's going to be, but the lower your utilization. Because if you had $5,000 on a credit in total credit card debt, and you had $70,000 in credit limit versus say that 10,000, then let's do the math here. Then if you took that 5,000 and you divided it by 70,000, now you're only looking at 7%. 7% versus 50%.
Yeah, I think the golden rule is you want to keep it below 10%. You don't want to go above that 10%, because then it could affect your credit score.
Exactly. I always make sure to keep all my accounts. So say like at any given time, I'll have a little bit over a G, or maybe even at the most, if I need to make some very large purchases that I'm going to pay down within the next month or two, maybe 2 Gs. And say, let's just say this: I actually have a pretty high credit limit. So I won't specify exactly what it is. But I have a pretty high credit limit. So I never ever allow it to get over 10% ever. So credit utilization actually really works in my favor. There are specific times too that I actually wanted to say too, that you can actually pay your credit cards down as well. And there's actually a lot of podcasts where you can kind of actually figure out, like listen to it, so it can kind of help you with this. But if you're going to pay off, if you don't want your stuff to get reported to the credit bureaus, say like you put like $1,000 on your card, the best thing you can do, as soon as that posts, pay it off as quick as possible. Because if you pay that off quicker, it's actually going to be less time to report it to the credit bureaus. And then also, once you pay something down, like the credit bureaus, they get like reports like every couple of weeks or whatever it is. But there's like sweet spots where you can really like pay it down before it even affects your credit. Because the more your utilization is going to go up. If you say you had nothing on your credit cards and you add $1,000, your utilization is going to go up. So it might take down your score a little bit, and then depending on how much credit you actually have. But if you pay that off before the statement actually there's actually a statement that's reported to the credit bureaus, it actually won't even affect your credit score, which is actually good. So there's ways to do that too. But utilization makes up 30% of your credit score. On-time payments is 35%. So those two alone are 65% of what makes up your credit.
You got to pay attention to that. That's really, really important. I mean, that can make or break your credit score, really. If you're just spending out the ass, man, you don't pay attention to it or whatnot, I guarantee your credit score is going to take a hit. At that point, better hope and pray you're paying it in full on time, at the very least, because at that point, even though it's going to take a hit momentarily, it will go back up as you're making the payments in full, because I've experienced that myself. But if you're the type of person who doesn't pay in full, if you just, for example, if you just make that minimum payment amount where you're utilizing a lot of credit, it's definitely going to go down.
Yep, exactly. That's the thing. It's definitely going to affect your score if you're just doing that minimal monthly. Unless like the only way, and even then, like I don't ever advocate it. Say you had like $1,000 and you're just picking the minimal monthly payments on it, and your credit limit's like 100,000. It's like that's 1%. It's not it's not above that 10%, but it can get really bad. Like if you're like Marius was saying. If you're just making the minimum monthly payments and that credit utilization is already over 10% of your stuff, it can get really bad, because that means that's just going to sit there.
Yeah, I would not recommend that. Even if you have a credit limit of 100,000 and you have a debt of 1,000, pay it off, because what's going to happen is, even if you make the minimum payments and you still have that large credit, well, not just the interest, but that's going to create bad financial habits. You're not going to run into a situation where you're like, because you've been so used to just making that minimum payment and not getting into the habit of making the payments in full on time, that you're going to run into a bad financial situation. You're going to develop bad financial habits. It's like you said, you're going to pay more money interest or whatnot. No, it doesn't matter what the utilization is. The key is the mentality. Whatever it is, just make sure it's paid off in full, and that way you don't have to worry about it.
Absolutely. Yeah, no, absolutely. Yeah, no, that's the thing. It's like we have these internal habits, and they're going to get built familiarity. I'm like blanking on how I'm saying it here. But what's familiar to us is going to carry over. It builds a habit. So yeah, no, I agree. If we're building negative habits like that, they can carry along with us. And that's the thing. If you have the $1,000, just pay it off. What's the point of not doing it? You have that $1,000 in your account, just pay it off.
Yeah, especially if you have a credit limit of 100,000, you can easily pay that off. I mean, the credit card companies want to give you a large credit limit like that if they didn't know you didn't have it.
Yeah, exactly. That's what I'm saying. If they didn't know you were responsible, they're not going to give you that type of money. So that's the thing. And some of these cards have fantastic things. I was just looking at some of the rewards things with some of my credit cards, like TSA, like free. You get like free TSA pre-check. There's a lot of great rewards. Another thing I want to say, guys, really, really check. These are some hidden benefits that I wanted to talk about for some of the cards here. So you really got to actually go into your cards benefits depending on what you have, what cards you have. A lot of them, if you bought something, say like a MacBook with like a credit card, check your credit card's benefits, because if it has warranty protection, if say like there's something happens to the MacBook 6 months down the line, even though like Apple and a lot of other places, they try to get you to buy these extended warranties. But if you actually look at your credit card benefits, you already have a warranty inside your credit card benefits. They'll actually cover, say like, for an example, I'm just using Apple as an example, a MacBook that you could actually be able to return it because your credit card policy actually has the warranty built in. So a lot of these really, really good credit cards, when you have like the excellent score, when you have like the 700 or higher scores, they actually have some of these features. Another one for traveling is with some of the miles cards is TSA pre-check, which means instead of actually having to go through TSA, you can pre-check in when you're going to fly somewhere. So you don't have to take your shoes and your belt off to go through TSA. If you do a TSA pre-check, and a lot of times this costs money, but if you have some travel cards that already include these benefits, you can actually get it free of charge. And you have to see, sometimes it's like a certain amount of money every 4 years they give you. Every card's different, but there's some really, really good benefits in some of these cards. Some of them, if you have the really, really high-end cards, like say like a Amex Platinum or like a Chase Sapphire reserved card, you can get access to the lounges when you're inside the airports. So like some of these have like lounges where you can sit and relax, and you don't have to sit in like the standard like, lounge areas inside of an airport. So really, there's some fantastic benefits that come with some of these cards, on top of the miles and the cash back that you can get. I remember one time I actually used my one of my Capital One cards years ago at a mechanic, and I got $300 cash back, man. Like, it was crazy.
Yeah, and if you had paid, and funny thing is, if you had paid the mechanic in cash, you would have got nothing back.
This is the most I ever saw, man. I never saw that much cash back, dude. Never. I was like, yo, I mean, I'm not gonna lie, I put a couple grand into the car. So I mean, I put money in, but like, I mean, this is when I had my older car. But $300, like, that was some nice cash back money. See, but that's why it's so important. You're obviously not usually gonna probably get $300 unless you're spending a hefty amount. But I'll be like in one shot. But I'll be honest, these things add up over time. And that's why it's very important for you to understand how to use your credit cards effectively to maximize them. So if you have credit cards and maybe you don't even understand the full benefits, I would actually say go look at your benefits for your card and really, really take a deep dive. That way you can utilize these things anyway. Because if you're going to go grocery shopping, you're already going to pay for that anyway. So just pay it off. If you were going to get gas, you were already going to get gas anyway. The key is to understand, though, and make sure that you budget for that money. Like, don't just think on your checking account or your savings now, oh, it's a free for all. Like, that money's on my credit card. That's where you have to keep track of it. You have to keep track of it because it's very easy to get and then you forget about it. You're like, oh crap, I put $100 on there for groceries. I totally forgot about it. You see what I'm saying? And back in the day, I've been there. You have to keep track of it.
Yeah, if people forget, one thing I would recommend is maybe setting up the credit cards on auto pay through your bank.
True.
So that way you don't have to worry about it. Obviously, that would, that's under the assumption that you have money in your bank to, pay it off. But if you have a multitude of credit cards that you're dealing with, say you have 5 credit cards each month that, you put money on, and, you end up forgetting or whatnot, and maybe it might be best just to put all the cards on auto pay. That way, no matter what the balance is, for a fact that all the payments are getting deducted by your bank on time. You don't have to worry about mainly making the payment yourself.
Exactly. It can be That auto pay is one of the best ways to do it. That mean it. Honestly, I'm pretty good with like, I do auto pays for some of my cards, but there's in the past I've always been pretty good with not to. But if you're somebody who like might forget, definitely don't take a chance. Like put it on auto pay, because I'm gonna tell you right now, that's one of the worst things you can do is to miss a payment. You don't want that. That is one of the worst things you can do. You never ever want to have to ever miss a payment. And I'm blessed to never have done that. But even if like you get there though, say like you've had a perfect like, so if it happens one time, you could probably contact them and they'll probably they'll make an exception for you if you're somebody who already has a good history. But yeah, you just don't ever want to run into that issue. It's 35% of your score. It's the most.
I mean, you gotta pay something at the very least. At that point, even though I wouldn't recommend it, at the very least you gotta pay the minimum amount to avoid the late fee. But then again, you gotta deal with the interest. But no, I mean, if you can't afford to pay it in full, at the very least put something on it to avoid the late fee.
Yeah, absolutely. It's better than paying nothing.
Yeah, and that's the worst thing that you can do, not paying it at all and just letting the balance sit there. At that point, not only are you incurring interest, but you're incurring late fees as well.
Absolutely. Let's see if any. I'm just gonna see if anybody because I always forget with Facebook is that I can't.
Oh yeah, did they ever fix that with StreamYard or now?
No, you can't see the things. Yeah. So Ray, my boy Ray, has actually been watching. So Ray, what's up, brother? Thanks for tuning in, man. We got to get the guys back together some point, man. Me, you, Andrew, DJ, everybody. So he said yes, it's all about leverage. Agree, Steve. Bad debt. Most definitely. Assets over liabilities. That is an absolutely true statement. And that's the thing. America is one of the things in the United States is most people choose liabilities over assets. Mario, I know you see it all the time. This is a liability country for sure.
Yeah, man. The country's built on debt. As crazy as that sounds.
Absolutely.
I mean, like you said earlier in the show, we're a consumer-based society. We're going to spend. It's just the way it is. I mean, our country is built on debt. I mean, our country is over 30 trillion in debt. I mean, we're a spending society. Is just the fact of it.
Absolutely. Ray, you can relate to this as someone who actually works for who's worked for car dealerships, and he has a history of working in car dealerships. That so many people are buried in these cars. During COVID, people were getting slammed. Dealers were charging 10 to 15K over sticker price.
Mm-hmm.
That is crazy. Shoo. He said, I love my lease, man. Always under warranty, and every 3 years I can upgrade or walk away. It's actually a fantastic thing. It's funny. My cousin is very, very financially well off, and he leases still. He leases. Every 3 years he does a lease. Debt to income ratio. Yeah. Nah, Ray. I know Ray knows. Because he anybody who's worked in the car industry, like Bill has been on here. Bill's worked in the car industry. Reagan's still in the car industry. You know, Ray. I want to get Ray on here one day too. Great guy. My boy Ray. But yeah, unfortunately I can't put comments for Facebook up on here. StreamYard it's not even StreamYard. Facebook is so lame right now. Like they've gotten so protective. We used to be able to put Facebook comments up on here. I'm not sure if it's something that's always going to be like that, but I haven't found a workaround for it yet. YouTube, if anybody comments on YouTube, I obviously can put us all on the screen, but I'm just glad we're streaming to Facebook. So I remember the first couple of weeks we couldn't even get it streaming back to Facebook, and that was a super big issue because we were spreading our platform not just on YouTube, but we obviously want to stream to Facebook for you guys. Mm-hmm. But no, Ray knows. Yeah, no. Lease is actually one of the it's one of the smarter ways to do it. Yeah, like you said, he can walk away after 3 years. You know.
I mean that might be an option for some people. Yeah. My only issue with leases is I think. Like the amount that you can drive, there's a limit on it, right? You can't go above a certain mileage each year. Otherwise, you'll end up paying a penalty, if I'm not mistaken.
Yeah, I think so. And maybe you might be able to negotiate, and maybe Ray can even, expand on that. Some people like I've never leased. I've owned outright my entire life until I financed this vehicle I got 2 years ago, and it had lower miles on it. Everything's good, and honestly, knock on wood, the car's treated me absolutely amazing over the last 2 years. But maybe Ray can expand on that. I know most people who have leases, it's a set amount of miles, but I think there are ways to get the miles higher. Like I just know I drive more than 10,000 a year usually, and I work from home, but I drive a lot like outside of like work. But yeah, no, I agree with that. Like that might be the one thing. So it really depends on your preferences. But if you're not going for it, you don't drive a lot. I mean, A lease could be perfect, but I think that there are at least you can get a lease that has higher mileage. I think. So let me see if I'll just keep my comments up for Facebook here, just in case he comments back in. But yeah, no, it definitely depends on your preference. Finance and leasing, they can all be good, but you just got to understand what your limits are. Because just because you get approved for something doesn't mean you can afford it. Like I said, $1,000 car payment. Okay, what's your career? Are you a lawyer? Are you a doctor? Are you doing really, really well? Are you making over 6-figure salary? Like, are you making $150,000 a year, $200,000 a year? Because that's the thing. Those type of payments to those type of people are nothing. Like I don't want to say nothing, but they can comfortably afford those payments. But if you're someone who's making $60,000 a year and you have $1,000 car payment, I'm gonna tell you right now, that is really, really, it's just not a smart move. It is not a smart move to do that. Because that's going to be a majority of your income. Say you're pulling in $3,600 a month after taxes, or $3,500 a month after taxes, or even $4,000 a month. Let's just go even. We'll say $4,000 a month after taxes. That's 25% of your income going to a car payment. That's one thing.
Now do you see why so many cars are getting repoed?
Yeah, because that's the thing. If you own a mortgage too, like you have a house, or you're renting an apartment, so Ray actually said, yeah, it's normally about 10 to 14K.
Okay, that's
14K. So that's the thing. If you drive a lot, 14K is not bad. I mean, it really, really depends how much you drive. But for 14K, I could make 14K work.
Ray, are you able to like negotiate that even more? Like, can you do like 20 or 25K, or is it like standard 10 to 14K?
I mean, Ray can expand on that. I don't think I've ever seen. I don't know enough about leases to really make that statement, but I've personally never seen that. I've never seen that, and I'm assuming it would really, really, really affect the lease price if it was able to do that. It would probably be a lot higher. But that's what he said. He's like, I love my lease, always under warranty, and after 3 years, you can either upgrade, or walk away. There's freedom in it. You know what I mean? There's freedom in it. Financing, you own the car after the car's paid off, but with a lease, you usually have an opportunity to buy whatever you paid on it to purchase the rest of the. You know what I mean? You have the opportunity to buy the car. I've known some people. I'm not going to mention their names on here who have gone over the lease. I knew somebody personally who went $30,000 over their lease, and they had no choice but to buy it out. So it really depends on
don't do that.
For that person, a lease was a dumb option. It was a dumb option for them. So everybody, you have to understand, everybody's lifestyle is different. So really understand, if you're someone who's going to drive a lot, you're going to go over that mileage, just finance. But if you can't buy it outright, I would say buying it outright is probably the best thing you can do. But a majority of people, it's understandable. They can't buy a $20,000 car outright. It's just how a lot of people are, especially if they have bills, they have a mortgage, they have all these things. It's understandable that they can't buy. Maybe you're not at that point of life yet where you have that type of money put aside. Yeah. So it really depends on your lifestyle. And yeah, just understand what the smartest investment is for you. Like I said, if you're making $1,000 car payment on a $4,000 salary, that's literally what a mortgage could be, 25% of your income, or a mortgage could be 35% of your income. But
yeah, I mean, I would just get an older vehicle and just buy it outright, and that way, imagine all the money I would save in the long run.
Yeah, because it really is crazy. Like people are just.
Yeah.
People go over their mortgage utilization too. This happens not just with cars. It happens with mortgages. You're not supposed to go over, 35-40% of a mortgage should never be more than
I think it's 35%.
Yeah, there's a sweet spot for it. So I just want to make sure that
I think it's like 30 to 35%. That's what it should be. I think it's for mortgage or for rent, either option. I think it's somewhere between there. Whatever your income is for the month, your rent and mortgage cannot be above 30 or 35%, or at the very least, it has to be somewhere between that. If it's higher, that is higher.
They say 28% is a really nice spot, but that's your gross monthly income. So they usually say about 36%. Gross monthly income is before taxes. So 36% usually after. So it's usually like a little bit high, but.
Yeah, I look at my check and I see the gross income, and then I see the after taxes, and I just want to rip my heart out. I get destroyed on taxes, man.
Yeah. It's crazy. But there's a lot of people that go higher than that. They go higher. Like the conventional loan sometimes will give you 43, 45% of your income. The problem is you're just not living comfortably. And that's why a lot of households nowadays are meant up of joint income. You know, the husband and the wife are both working and making money because it's a tough, especially right now, it's a tough economy. Unless you have a fantastic career where you're making really, really good money, which is definitely possible. That's a beautiful thing about America. We live in the freest country in the world. You have an opportunity to kind of go out there and make your money every single day. But, yeah, you want to live comfortably. That's why they have those parameters in place, and they tell you 28 to 36% because they don't want you to over leverage yourself. You over leverage yourself. If you fall in hard times, it could become really challenging. They only give you 2 to 3 months to pay that mortgage too, to catch up. You know, foreclosure can come quick.
Yeah, no, that's definitely something you don't want to play games with, man. No,
Yeah.
give them a call, try to get on a payment plan, do whatever you got to do because you know you don't want to end up homeless.
Same thing with a car. If you don't pay that car for 90 days, you're getting a car. They're gonna come to attempt to repo the car.
Yeah, well, listen, getting your home repossessed and getting your car repossessed are two different things because at the very least with the car, you know, you can take public transportation, you know, places if you live in a good area. But God forbid they take away your home, man. I mean, you're going to have to rely on other people to get by.
Absolutely. Yeah, Ray said, know your budget. Yes, sir. Absolutely. That's the thing. It's critical. Just understand your lifestyle. Understand what you're making at the time. It doesn't mean you can't level up and make more income later. That's the thing. Like, always be trying to like learn new skills and be trying to level up your money. That's the biggest key. Is you always should just be trying to make more money. I always say don't sell your soul to money. Like, money is an important. It's not. We always say on this podcast, money is not everything, but it's a tool. It's a tool, and it provides you access to many different things. So, if you want to live a certain lifestyle, you have to make more money. So just try to figure out what you're good at, where you want to level your skills up at, and what's going to make you some extra income.
Yeah, money opens up a lot of doors.
Yeah. And Ray said, love these topics. This is what needs to be talked about. It really is. And I love these topics too, man. And thank you for tuning in. Really, I appreciate you, brother. These really are the topics that they don't get talked about enough. I'm glad to see on YouTube more people are covering these things. And that's the thing. Finance isn't always like managing your money isn't always the sexiest thing. Like, it's like, oh yeah, it's kind of boring and, you know, it takes time. But the beautiful thing about it is once you get to a level where you're financially free, that's the sexy part about it. That's the part where, like, hey, you know, at the drop of a hat, you can like say like somebody's, you know, got to go somewhere and you got to fly out somewhere. You can just with the drop of a hat tomorrow, just go out and purchase a trip and go out and fly wherever you have to. Or I think being able to take care of other people in your family, you know, put other people, you know, that's a beautiful thing is when you have that money available. And, you know, the process sometimes sucks, but you have to remember the long-term goal. That's the critical part. You have to remember the long term.
I agree, man.
Mm-hmm. Yeah, and that's the thing. It's like that's what's going to separate you from the next person. I know we had our one guy on here, you know, our guy Reagan, and he was saying, you know, one of the biggest things is he's like a lot of people will say in 10 years, you know, if I'm retired and sitting on a beach in Barbados sipping a mojito, he's like, those same people will be out there telling me, oh, you got lucky. He's like, but you weren't here when I was busting my balls, grinding every single day, doing the work that other people didn't want to do, working these long hour weeks. He's like, yes, these like people will always have something to say. They'll say you got lucky. But meanwhile, they weren't putting in that same work.
You know why? Because they only see the finished product. They don't see the process.
Yep. They don't see that grueling process, the consistency day after day. And that's the thing, I think even Tom Brady had said that. Tom Brady said, you don't need to be super talented to make it and make it big in this world. You just need to be willing to do every single day the things that other people are not willing to do. That's the thing. You don't need to be special or have a certain talent to be able to do that. But you do have to be able to put in the work that other people are not willing to. And that's what could set you apart. But the beautiful thing about it is almost any of us can do that. It just requires that mental discipline to do it. You know, that's the key.
Spoken by the GOAT.
Yeah. Yeah. And even Tom Brady said that. Look, Tom Brady is a perfect example. He was drafted, 199 overall. And he didn't have a special talent coming out of college. I mean, he just worked hard. He worked harder than the next guy in the room and was able to do some big things. And yeah,
his success is well deserved.
Yeah. And this is coming from a guy who hated Tom Brady when he was in the league. Yeah. But I mean, hey, we can't deny. I mean, man's the GOAT. I mean, there's no hate there. We just hated him because like he wasn't our quarterback.
I think it was more so the hatred for the Patriots as a whole than Tom Brady. I think that's what it was. Looking back on it now.
Yeah. I think all the cheating allegations that were linked to the organization and everything like that. It was more so how they obtained at least the first 3 championships. There was a lot of scandal linked to them.
Yeah, Ray. The other ones were, one fair and square.
Yep. It says Ray said outwork everyone. First one in, last one out. I love to compete, man. Anyone can do it. Anyone. Yeah. Absolutely. That's the thing. Anyone can do it. Most people are not willing to, but anyone can do it. That's why it's so important to surround yourself too with like-minded individuals. Because guess what? If you're doing that and other people be like, why are you working so hard, man? Why are you doing this? Like, you need to take it more easy in life and stuff like that. And there's nothing wrong with having a little bit of balance, whether that's your family and spending time here. But get up every day and just be like, great. I think your mindset is so critical. Like every single day when you get up, do you say, oh shit, another day to work this job, or another day or do you wake up and say like, yeah, it's not, maybe you want to run your own business one day, but you're working for someone else. Or do you wake up and say, hey, look, it's another day for me to hone in on my craft, learn my skills, and this is going to benefit me later in the long run. It's another day for me to spend time with my family and those closest to me and those who mean the most to me. Like, you got to wake up and it's a mindset. And every day is not going to be fucking sunshine and rainbows. It's just fucking not. There's going to be days when you're just not in a good mood. That's okay. It's okay to not feel great every single day. Happiness isn't going to be there every single day. But, hey, man, we got air in our lungs. We can move our arms and legs. We can, we have the ability to get up every single day and utilize our minds and fucking work hard. Ray said it best right there. He said, anyone can do it. Anyone can do it. And that's the absolute truth. Yep, he said hashtag mindset. He said my goal every morning is to beat this old man. Jamal's at the office in the morning. He said the feeling of accomplishment I feel is unreal. Yeah, man. I mean, hey, that's what we need, right? We strive to be the best. I think it's like fantastic when I can like tell people in my field, like when they come to me for something, but they've been around like longer, it's like because I've like honed in, putting them the time in behind the scenes outside of work, and they're like, "Yo, where'd you learn that skill?" Or "Where'd you learn that?" So I'm taking like Excel courses or something, and they're like, "Oh, like where'd you learn that?" And like meanwhile, these people in the field like 20 years, it's like it's good because I learned things from them, right? Because they've been around. But like if they can learn things from me too, I'm like, all right, cool. Like, you know what I mean? Like it feels good. I've only been in the field 5 years. It's like he's got people been there 20, 30 years.
Ahead of the curve. I like it.
Yeah, we're all trying to collaborate, man. We're all here to help each other. Everybody eats.
Yeah, man. Gotta make that money. Let's get it.
That's the mindset, man. Everybody eats. Man, we went down like a whole path here. Credit, everything. I didn't even really get to get.
We definitely need to do a part 2.
Yeah, and I want to get like a whole group on here. I want to try to get Bryce in here and try to get Rob and everybody in here. Ray, if you want to hop on, in a future episode for this, I'll reach out to you ahead of time the next time we do one. So if you want to jump in, everybody's welcome on these, man. It's us like-minded people coming together. Nobody needs to have a certain qualification or anything like that. I didn't really get to cover credit stacking. That was one thing. So I'll just cover it really briefly. And we can save it actually for another episode too. Where did I have it? I had some notes on it. Essentially, credits, like I'll break it down very simply. So credit stacking is just it's a method for people, for small businesses. If you can't say it's a way you can't get traditional loans, credit stacking can be a way for small businesses to leverage more capital. I had it here. Let me see where my notes are. Because I've always been interested in it, so I was taking notes on it, but it really applies to people who are have a small business. So I had some of the pros and cons kind of here. One of my notes. Let me see. So credit card stacking. So all it really is it's it allows you to utilize a large sum of credit with lower interest rates, so you can kind of spread your credit out. I had some things on cons. Let me see where it was. My notes kind of closed out on me here. It's all right though. Yeah, ultimately, it's a good way for small businesses if you're trying to utilize a large range of credit. You can do this, and you can kind of go through the credit card system. Essentially, all you're doing is you're stacking. Like, say you're paying off that debt. So you put 50,000 on, and then you pay off the 50,000, and you put another 50,000 on. You're just utilizing different. You're going through the credit card systems than through a traditional loan, and not everybody can get traditional loans. So sometimes it can be beneficial. The only thing is you have to be careful, interest rates and things like that with credit cards, but it definitely can be a beneficial method for people who are small business. Like if you're someone who just started a small business or currently working in a small business. And you know what? We'll cover it more. I'll dedicate more time to this. We'll do a next episode. I just don't want to drag this too long. The financial episodes are great because this is something that a lot of people struggle with, especially here in the United States. So any way I can that we can help people, or just these conversations are just things that need to be had. And it's been a while since we did a financial episode, so I would love to have a nice panel on here, kind of like we do for after hours. I would love to have a nice panel on here.
Of course, I think that'll be very beneficial, especially get the guys that work at the car dealerships on the show, man, to help people out who are potentially looking to buy a car. I think that's very, very beneficial for the viewers.
Absolutely. That's something that's not talked about enough, and that's the thing. Like, we know a lot of people who are. So yeah, Ray just said absolutely with the thumbs up. Yeah, no, it's something that's not talked about enough. Car debt is one of the biggest things in this car. A car, I would say, like, besides your home, it's going to be one of the biggest investments you ever make is in your vehicle. Your home is going to be number one, but number two, like, it's going to be the second biggest investment you make. But yeah, I would love to have a whole episode on that. A lot of these guys have financial backgrounds anyway. Like, Ray's interested in this stuff. Reagan is not just cars, but he's also real estate. And then you got Bryce, who's in financial planning right now. I'm like, there's a lot of people that could really offer. And Rob's in real estate. Rich is always good with these episodes. So we got a lot of people that can kind of come in here. Rich actually just started a new clothing line as well. So yeah, there's a lot of stuff going on here. But I guess we'll put the bookmark in this one for now, and we'll definitely save this for another episode so it doesn't drag out too long. I want everybody to be able to enjoy this episode without it getting too long. Man, what a good episode. Ray, thanks for tuning in, brother. I know this was kind of a last minute promotion, guys, because I've been working to get one of my buddies on here. It's just been a little bit challenging because of his schedule, but it's all right. He's going to come on. We might have to do it on a Tuesday next week. And I'll know more about that as the weekend as we get towards the weekend here. So if it's going to be on Tuesday, I'll have promotion out first thing Monday morning. And I'll have that out way ahead of the curve. So, yeah. That being said, I just want to say thank everyone who joined in tonight. My brother Mario, the OG to the podcast here. Thank you for joining me tonight, man.
No problem, bro. My pleasure, man. Glad to come on. I can't wait for the next financial episode. I'm definitely going to be on that one.
Yeah, man. We'll definitely have a couple more throughout the summer here as we plan. Like, we won't wait as long for the next one.
Yeah, next one I'll probably dive more deeper into the credit cards, and I'll probably explain to the audience how you can really, really reap those rewards with the cashbacks and whatnot, which cards to use at specific spots, because obviously we kind of ran out of time today. We're going to get a chance to do that. So the next time we have a card episode or anything like that, like, I think that'd be very, very beneficial to let the people know what types of cards they can use for which places.
Absolutely. Yeah. No, that would be one of the more intriguing things too, because everybody wants money, right? You all want money. So that's an intriguing portion. That's a very, very interesting portion of the credit card game. So
damn right, I want money, bro. I want all of it.
Yeah, me too. Utilize it to your advantage. Ray said, good episode. Glad I was able to tune in. Have a great night, guys. Likewise, Ray. Thank you, brother.
Thanks, Ray. Have a good night, boss.
Have a good night, my friend. But yeah, guys, we'll see you next week, episode 178. Like I said, it may be all outside of our traditional days, it's typically Thursday, every once in a while, Wednesday or Friday, but Tuesday's a rare day for us. The last one we did was when Reagan came on because of his schedule, which was a couple months ago. So we might be going Tuesday next week. Either or, though, we will have an episode, and we will be back at it. And I'll keep you guys posted as we do more financial episodes throughout the summer. That being said, have a good night, guys. Enjoy your weekend. We'll see you next week for episode 178. Have a good night, brother.
Good night, bro. Take care, man. Good night, Lockdown Nation. See you guys next time.